Ladies and gentlemen, it is happening. One of the banks that I warned about yesterday that would face collapse in 48 hours, well, the writing's on the wall right now. We have just got huge news that PACWEST is going under. It is finished, people. Why they have not made an official announcement and they're going under now, according to their stock price, according to the sources and the news that we're getting, PACWEST is going under and they could just have 24 hours left. This has come after the news that the Federal Reserve lifted interest rates yet again by another 0.25%, taking the federal funds rate to 5.25%. And unlike many people think, they think that the Federal Reserve is going to pause. This is the final rate hike. They're going to start cutting interest rates, while the Federal Reserve has opened the door for more interest rate hikes, and they should, because the inflation job isn't done. They need to bring inflation back down to 2% before they even think about pausing or cutting interest rates. And so this is what's really spooked the market today. We saw a lot of red across the board in the markets, especially across the whole banking sector, which I'm going to go into in a moment, which other banks are facing collapse as well. And we're seeing a huge flight to safety with bonds going up in price, the 10-year treasury yield, and also what I'm sure a lot of my subscribers will be happy about, gold and silver, and also Bitcoin is going up again. Like I've been saying, every time we see there's more trouble for the banks, people also diversifying into Bitcoin as well, self-cussing it. So no matter what happens to an institution, they still own something that's barterable. So everyone, what exactly is happening with PACWEST right now? And what other banks are facing collapse this week next? How bad will this banking crisis get? And what new insights did we just get from the Federal Reserve that shows things are about to get much worse? Well, that's exactly what we want to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, look at this, everyone. PACWEST falls more than 50% after hours on report the bank is waiting sale. And we can see here the live price right here. It is now down 56%. So this is what we've been seeing time and time again. We've been seeing these banks where it's very clear that they're in trouble. Their stocks start to crash, but then it gets to a level where it's too much pain for the banks. They say, look, don't worry, maybe we'll sell, hoping for a miracle. But no, I think PACWEST may go into FDIC receivership again. And again, the FDIC is running out of a lot of money. But it is going to be a lot of pain for PACWEST. And if anybody still has money in PACWEST, come on, get your money out now, especially if you're an uninsured depositor. So PACWEST Bancorp shares tumbled 57% in extending trading on Wednesday following a report that the bank is weighing a strategic options, aka bankruptcy, including a potential sale. The regional bank has been assessing options including a breakup or a capital raise, CNBC confirmed, according to one person familiar with the matter. Bloomberg first reported the news late Wednesday. Well, I don't think they're going to be able to raise capital, everyone. Their shares are absolutely tanking. They're becoming worthless. I don't think anybody would want to buy their shares anymore. Besides maybe Jim Cramer. The shares of many West Coast regional banks have been hit particularly hard since the collapse of Silicon Valley Bank in March. And this is what I tried to warn about, the contagion effect, the ripple effect, the domino effect. I said we're going to see more bank failures and people, again, this is just the beginning. We're going to see hundreds of banks fail during this banking crisis. In part because of concerns that customer bases are similar. This week, First Republic was seized by regulators and sold to JP Morgan. The Los Angeles-based PACWEST has roughly 750 million market cap and is down, look at this, 72% this year. On Wednesday, PACWEST shares declined nearly 2% during the regular session and notched their fifth straight losing day. So look at this chart, everyone. We can see their shares have just fallen off a cliff. And if we go to the month, we can see it's not too much better. We go year to date. Look at this. This is a chart of a company going bankrupt. Now, I know what you're thinking. Well, okay, things are pretty much done for PACWEST, but what other banks are facing failure? Well, we got a few names here that I think could be facing failure, maybe even this week as well. So other regional banks declining extended trading following the report, with SPDR regional banking ETF shedding 5.6%, and this ETF has just been getting hammered. And this is what I reported yesterday. I said Western Alliance and PACWEST could fail in 48 hours. So Western Alliance, I still think they're going to go down. Their shares dropped 29%, while Commercia slid 13%. Key Corp shares fell 11%. So again, we're seeing stress across the whole banking sector. And also on yesterday's video, I heard a few people had puts on PACWEST, so congratulations on those gains. PACWEST reported that the total deposits declined more than $5 billion in the first quarter to $28.2 billion as of March 31st. However, the company said it saw a net gain of $1.1 billion deposits from March 20th until the quarter end. I wonder if that was some of their friends just trying to prop up their balance sheet or maybe getting some loans from the Federal Reserve. We all know it's pretty much over for PACWEST. And also, again, like what we're seeing with the other banks that failed, a lot of these deposits are uninsured, so they're going to have all that big money getting taken away. And if everything was fine for PACWEST, you would have think that they would have come out there to try to calm the nerves. But no, they declined to comment. But people, what really ignited this fire for the banks today in this sell-off was what the Federal Reserve did and what the Federal Reserve said, like I warned yesterday would happen. So let's have a look to see what the Federal Reserve is saying and what they're doing now, which is going to make it even tougher for the banks. So look at this. As expected, some people were even saying they're going to pause. I was saying no way. Fed increases rate a quarter point and signals the potential end to hikes. But they're speaking out of both ends of their mouth like they usually do. And when you actually go to their news conference and look at some of their questions, they're actually still saying, no, the fight for inflation is not over and there's going to be more rate hikes coming. And the reason why this is so important for the banks, because the whole reason these banks are in so much trouble is because these bonds, these mortgages that they brought in 2020, they've crashed in price. And every single time the Federal Reserve lifts interest rates, it makes these assets go lower and lower. So when the Federal Reserve said today that there could be more rate hikes coming, this sent a lot of shivers down the bank's spine and their investors. So here's some live updates from the meeting. So more rate hikes still possible, Powell says. The Federal Reserve could continue hiking if economic data points to central bank in that direction, Jerome Powell said. We are prepared to do more if greater monetary policy restraint is warranted, and he later added a decision on a pause was not made today, but said that change in statement language around future policy firms was meaningful. So that's exactly right, everyone. You're having the Wall Street bulls, you're having a lot of the analysts, they're begging for a pause. They know that this bear market is not going to last. They know that the fundamentals are not looking good for the markets at all. So they're trying to tell the dumb money, look, don't worry, the worst of it's over. The Federal Reserve is going to cut interest rates. They're going to print money. Things are going to go back to the moon again. Buy, buy, buy. Meanwhile, the banks on the inside are selling. Because look at his next comment. He admitted the process of tackling inflation has further to go. The Federal Reserve Jerome Powell said on Wednesday that while inflation has improved over last year, the fight to tame price pressures is far from over. Inflation remains well above our longer run goal of 2%, Powell said. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run, and the process of getting inflation back down to 2% has a long way to go. He added that expectations for long-term inflation remain well anchored, and the central banks remain focused on promoting maximum employment and strengthening purchasing power. Well, I don't think they're doing too good with either of those. Unemployment is going up, we're seeing more mass layoffs, and again, people's purchasing power continues to go down every single month. But the most key takeaway I think we should have for this meeting was Powell's comments on the JP Morgan takeover. And again, I think this scared a lot of the other smaller banks that thought maybe they were going to come to save them. Powell calls JP Morgan acquisition of First Republic an exception. He said, I think it's probably a good policy that we don't want the larger banks doing big acquisitions. Well, I do think that's a good policy, and it's actually the policy right now. JP Morgan is not meant to have more than 10% of US deposits, and now with the acquisition of First Republic Bank, they've just become even bigger. That is the policy, but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. Again, yes, it's good for the banking system, but it's not good for decentralization, and it's also making the bigger banks bigger. Another regional bank purchasing First Republic would have also been a good outcome, he added. Well, they're all in the same boat. But listen to what he says here. This is what's really worrying the banks right now, and this is why I think PACWEST went under. Powell also said he does not have an agenda to continue consolidating banks, adding that he sees value in having banks of different sizes within the system accomplishing different goals. So maybe that's a warning to these other regional banks that, look, we're not going to have these big banks come and bail you out anymore, and I hope that's the case, but time will tell. So everyone, I know what you're thinking, well, okay, well, what does all this banking and economic jargon mean for you in simple terms? Well, like I warned yesterday, during 2008, did you know there was 157 banking failures in just 2008? Then there was still another 100 in 2009, and it went on all the way to 2011. So we didn't just see 4, 5, a dozen, 50, 100 banks fail. We saw about 300, 400 banks fail during the banking crisis. And a lot of people aren't admitting what we're in right now. Hello, look around, smell the roses. We are in the middle of a financial crisis, but they will not admit it because they don't want to cause panic. And again, I'm not here to cause panic. I'm just trying to warn people to prepare them, because the mainstream media, they won't warn you. They won't want you to be prepared. They'll be more than happy for you to keep your money in the banks and let the bank go under. And if you're an uninsured depositor, lose all your money. So again, PACWEST is pretty much finished now, people. They are going out of business, and I think Western Alliance could be the next to go. But everyone, what do you think about all this madness? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.